Hey guys, thanks for checking out this FinPrep weekly market update for week ending 25th September 2015. Pause the screen reading thoroughly. Information contained herein does not constitute investment advice, should not be used as the basis of investment decisions. In order to obtain investment advice, contact a registered investment advisor. FinPrep and its affiliated parties shall not be held liable for any investment decisions that you choose to make. Information contained herein is for, informational and educational purposes only. All right. So, interesting week as always. Got a gap up on Monday morning, but held a close below this lower support line within that symmetrical triangle we were looking at here post correction. Managed to close below the 20-day falling 20-day moving average and outside. Opened up right at the lower side of this prior price channel and sold off. So, having stated that though, the other factor looking interesting for sort of the longer or medium term would be we now have the 50 crossing over the 250 daily moving average, so sort of your medium term price moving average crossing below your 250 day, which would be your longer term on your daily, kind of doesn't paint a great picture unless it of course turns around. So on the other hand, for the short term, your fast stochastics are approaching oversold. Yeah, and MACD potentially one could might see kind of a little bit of higher lows in through here, as well as can it cross above the signal line and kind of produce a nice little bounce off of it. So which would tend to reflect in price as well. So kind of looking at the scenarios of seeing if we can recapture price channel. And if not, basically the 187 level and more immediate term 190.5. So that would be your downside scenario. Your upper side scenario is primarily focused in on the falling 20-day moving average, recapturing price channel, should falling 20-day hold, just kind of reapproaching that 2,000 level again, or 200 on the SPY. In terms of Dow, more or less the same thing. The only real major distinction is kind of your closes and then your open or your high of day on Thursday and then your low of day on Friday were kind of pretty well defined by what was intra-pattern trend line, capping a bit of these rallies, as well as the spring off here on the Tuesday of last week. So interesting to see how that's still kind of helping out with price in terms of providing either support or resistance. Although we did close below the 20-day moving average, you do still have same thing of as far as like your stochastics looking like they're a bit oversold on the daily. What is super interesting to see is how does price navigate this 166.50. So should we get an upside week next week, not only is it your downtrend off your price channel from this year, flipping to the weekly here, guys, is looking at 2013. So sitting back, 2.5 years, and through your May, capping your rally in your August time frame, capping your rally in your September time frame, being your basis for your launch of your December rally. Kind of got violated here in the beginning of the year, but did stop your sell-off there in April, and then was kind of your platform for your bullard lows in your kind of Ebola time frame in and around October of 2014. Only then to be taken out and actually served as open. You'll notice we kind of opened doggone really close and actually put in a high right at that trend line here, subsequent to our correction, and even a few weeks into kind of the recovery off that sell-off we had about a month ago there, put in the high right there. So pretty darn interesting to see. Should oversold conditions lead to sort of another bouncing week in terms of upside price action, how does it handle this 166 area where you have that multi-year trend line as well as your lower boundary of that descending price channel? So super important zone in terms of looking for a pretty interesting inflection potential. In terms of NASDAQ Qs, basically similar story, but price remaining for much of the week within that downward price channel, but being capped. Interesting, you see right at your highs of your day on Tuesday and Wednesday there, just being cupped in and capped by that now declining 20 daily moving average. Popped above it on Monday on the open, but failed to hold and obviously closed below and outside down here, and actually slightly below your price channel. So the other point would be interesting to make is that this breakdown out of this ascending bearish wedge wasn't like really the level of severity that could be expected in these sort of environments. So potentially you could view that as a bullish cue for the short term. Otherwise, let's suppose the aggressiveness in terms of a sell-off returns next week, for example. Needless to say, that opens the door for like 100.5 as well as 97.5, or in and around that area, 98, let's say, just as kind of your next levels. Trannies basically did manage to break down as well, kind of recapturing this price channel that we've had previously discussed in terms of negative non-confirmation. Close though at the upper end of it with oversold readings, so not to say that it's a straight shot down, and it wouldn't be horribly surprising to see it pop above and do more of this type of stuff next week. So remains to be seen. We'll watch. I think the surprise though was kind of the Russell sell-off, and perhaps it was just getting caught up in the sell-off we'll look at in your biotechs in terms of just being in another aggressive sector. But here you have going back to 2014 March, capping basically your rallies in through there, as well as your prior attempt here through June, as well as your September, and even closer towards your end of year, but more in sort of that October time frame. Kind of just chopped around, and yeah, trend lines really weren't being respected at up to that point. Though you can look at it and say, well, that open, did kind of stage a rally off for your February rally of this year, prior to rolling over in this kind of U-shaped pattern, I guess, as it were. So having closed below that on a weekly basis is interesting. That it didn't hold, as it was your support channel here, as well as that longer term trend line. Not to say that it can't recapture given it's oversold as well, but just another cue to listen to. So biotechs definitely led the action in terms of what caught everybody's attention. So we discussed the 360 level as a potential source of resistance, as it kind of held this rally and a few others, as well as kind of capping our most recent kind of flag type wedge and other applications, right, that we're looking at, and then sold off like crazy this week, as you could tell. News driven though, as there are allegations concerning price, just how products are priced essentially within the biotech space, and whether or not action should be taken with respect to that. So leading to concerns over potential future profitability. Needless to say, things sold off. Kind of got held in around your 250-day moving average, and then your trend line extending back to 2011, I believe. Yeah, we looked at this previously, 2011, August 2011. So having lost that is a big level, however, oversold on the daily. Looking at your weekly chart, though, you have your 50-week moving average in and around this 320 area. So should we get sort of a bit of a relief rally next week, really important to see how does it deal with 320 as one possible scenario of an inflection point. So otherwise, just looking forward to seeing what happens. But clearly kind of quite a spike in volume, perhaps capitulative, you might argue. So potentially looking for, have this, is the selling exhausted, and is there therefore perhaps a retest of 335 in the cards over the next few weeks. So remains to be seen. TLT Treasuries played out like a champ in terms of holding up against this prior trend line, capping multiple rallies, and actually capped this week's as well as the 250. We discussed this zone of congestion potentially. That was discussed in last week's video, and so far it's played out well, and you gapped down on Friday. So although you are holding what could be your 20 daily moving average looking like it's ready to cup around and rise, and then your slightly rising 50, argues for a potential retest, unless of course it fails, gaps down, and reapproaches sort of the extension of this kind of inverted wedge trend line. Dollar also played out according to what we were looking at last week as a potential scenario of being capped at the 50-day moving average at 25.25 in price. You got on Thursday here an aftermarket speech by the Federal Reserve, essentially indicating potential to raise rates again in the future. So potentially putting a bid under dollar for a day, but that bullish engulfing candle we did discuss last week did play out like a champ, as it generally would lead to short-term positive price action, as the name implies. But having now put that behind us, basically which side do we pop out of the 50 and try to retest these highs at 25.75-ish? Or does this continue to hold as resistance and then fail and reapproach your 250-day moving average, reapproach perhaps some of these trend lines, or more importantly just the general zone of 24.50? So indecisive mid-range train, and as a result that kind of leads to some indecision, at least on our end here, as far as how to position relative to commodities. So silver played out like a champ. Monday sold off, closed marginally green but sold off, you could see by the wicker, and then gapped down on Tuesday. Rallied back up into, I guess, gap support or trend line support, and then the question here is, does this then become the base for another sell-off, or can price rally and get caught up below the 200 and 250 MAs? Looking at the last time we did this stuff, approach trend line sold, approach trend line sold, approach trend line, sold. So 3 tests of it with kind of this choppiness to kind of perhaps weed out the weak hands or just in general decided direction. So wouldn't be horribly surprising to see a sell-off, although on the other hand, wouldn't be surprising to see another fake out. So stepping on the sidelines since dollar remains mid-range. In terms of oil, we had that 30. So in 6 days, price rise of 30%, arguably a short squeeze, given that, as I recall, the positioning with net specs concerning shorts was at kind of an extreme, multi-year extreme, led to that short squeeze. If we want to attach a label to it, creating that bear flag as prices consolidate more or less sideways, not terribly deep, but long in time as far as it's been 3 weeks, which is, I suppose appropriate given the 30% rise. So the concern here, though, is this 50 daily moving average, right, which definitely kept the rally in through here and then became the platform for this launch. And then once lost the 50-day, the blue line here, oil recollapsed. So as this has come barreling down on us, and this popping in and out of this pattern, head fakes are they, or is this again just gearing up, getting ready? Stochastics drifting nicely down into oversold territory eventually. So can't completely rule out the bear flag to play out, although it's not a bottoming pattern. Typically these are found higher up in price ranges in terms of consolidation, so not a bottoming pattern. 50s barreling down on us, and then price having lost that 20, which is in and around here. So mixed picture, especially with dollar in the background. So would be interesting to see though how it plays out. China popping around and basically falling below your 20-day moving average, but still looking at in and around this trend line support that we discussed last week as being a pretty important area. Junk bonds did approach that trend line as we were looking towards as a scenario last week, but kind of capped the rally on Thursday, opened on Friday, and then sold off there. However, looking at oversold territory, so remains to be seen how that plays out next week. In terms of tips, the zone of support providing lift all these pops as well as this downtrend here did play out as resistance. Gap down on Monday morning. Did reapproach though, drifted up for the rest of the week, only to meet resistance at some of the short-term EMAs, and then sell off. So interesting to see that how things did play out last week. So looking forward, even though things may sound chaotic, just listening at the news, if you're just looking at a big red or green arrow and things kind of it's very not easy to see the big picture. That's the whole point of these videos, is to show you visually what is happening with respect to moving averages of price and trend lines, because it has mattered. It's clearly been inflection points even for these kind of just daily micro moves within the overall larger patterns of this downward channel and this wedge we're looking at. So technical analysis definitely has its place. It definitely adds some context, and so I hope you guys keep checking us out. Check out these videos, let us know your feedback, subscribe, and we look forward to updating you next week. Take care.